analyst Gordon Johnson made a bold call on First Solar this past Monday on Fast Money. Take a listen. In terms of your greatest short opportunity, what would it be?
First Solar.
First Solar.
That's
you
right.
think it goes to bankruptcy?
If it does not acquire a polysilicon company, they're structurally disadvantaged with thin film modules, I think it goes potentially into bankruptcy.
Potentially into bankruptcy. Our next guest says First Solar going bankrupt is the most ridiculous comment he has ever heard. If this were the mill, it would be false. Let's bring in Sanjay Shrestha, alternative energy analyst for Lazard Capital. Why is that false? Gordon makes some compelling points about needing to buy a polysilicon company.
Few points to note on that. I think that, first of all, right, our view on the sector is that sector is going to go through the rationalization. There's going to be a lot of companies that are not going to make it. But in that rationalization and the sector evolution, First Solar is not a casualty. These guys are one of the big winner on long-term basis.
Why?
Here is why. They're going to generate a ton of cash. And when you sort of fast forward and think about the growth of this industry, First Solar guys will be able to have sustained earnings of about $7 a share. Company that generate free cash flow and be able to deliver this kind of earnings, I don't think is a bankruptcy candidate. I just don't.
Sustainable how? How are they sustainable?
Well, a few things on that, right? Their cost structure could get to 50 cents a watt, right? And if the cost structure goes to 50 cents a watt, even if the crystalline guys are selling it at 75 cents, there's no way crystalline guys can compete with the First Solar guys in that scenario.
But how can First Solar compete with a Chinese manufacturer with Chinese governments basically subsidizing and pushing cash through? I mean, there's no way of competing against that.
Well, here's the thing, right? What you have happening right now is you got a major subsidization going in China, but the problem is that, the government subsidizing body is going to 25. Even in that scenario, the crystalline cost is 75 cents. First Solar can get 50 cents of cost structure. I mean, there's no way crystalline guys can compete with First Solar on a sustainable basis from a cost standpoint.
It seems like you would probably have a lot of difficulty convincing investors who are calling you up that First Solar is actually a buy here. Because even if there's a rationalization process that happens throughout the industry and a lot of other companies go bankrupt, oftentimes the whole sector experiences softness.
Well, look, that's a fair point, right? When you really think about it from that perspective, what the stock is in the near term, next 2 days, next 2 weeks, I get that, right? It's a bit of a market call right now. But when you really think about this company from next 6 to 12 months, right? And when you really think about how much cash can they generate with their systems pipeline, that's $40 a share. Their property, plant, and equipment, that's $20 a share. You got $60 of cash you can get out of this company today. If you were to liquidate the company and the stock is selling at $44, why is that a short?
So you talk about consolidation in the space, and clearly there's some weak players. First Solar, how can they strengthen the brand? Who it is that they go out and maybe buy?
I don't think they really need to buy anyone, quite frankly, right? I think their cost structure is actually a structural advantage that they have, not the other way around, right? Today, we're looking at a market where the poly is so depressed. It's going to $25. It's a structural decline in the polysilicon prices. Even in that scenario, the poly guys, their cost structure is going to bottom out at 75 cents a watt. For solar guys, they can get to 50 cents a watt, right? So if they can do that, there is no point, none whatsoever, for them to go and buy a poly company right now. And here is what I find it to be completely perplexing, some of the comments I hear, right? Everybody talks about, oh my God, these guys are over-earning because of their systems business. Reality is it's that systems business, right, that is going to give them 3 years of window to generate significant cash flow while they continue to come down the cost curve. And even at 75 cents and 50 cents, it's going to be...
Sanjay, we're running out of time, but I just want to underscore something that you mentioned, which really is a shocking stat. They have $60 in cash and they're trading at $40-something a share.
Well, $60 in cash you can get out of this company today if you sell project pipeline and property plant.
Okay, got it. Sanjay, thank you.
Thank you so much.
Hope to see you again soon.
Yeah.
Sanjay Shrestha.
Shepard Smith here. Thanks for watching CNBC on YouTube.